Most people don't realize it, but their credit score could be the hidden reason why they're paying more for nearly everything. It might seem like just a number, but one wrong move, like a late payment, can drop your score by over 100 points without giving you any warning. The scary part is that this 3-digit number holds the power to decide your financial future. It can influence whether you're approved for a new apartment, how much interest you'll pay on a loan, or even if you qualify for a credit card at all. Imagine two people with the same income and lifestyle, but one gets approved instantly while the other gets rejected, and the only difference between them is their credit score. That's how powerful this number is, and yet, most people don't even know how it works or how to improve it. But in this video, I'll walk you through everything you need to know: what a credit score is, how it's calculated, why it matters, and most importantly, how you can start improving it today with some simple steps that actually work. And make sure to stay until the end, because I'll share a powerful bonus tip that most people completely overlook, yet it can give your credit score a serious boost when used the right way. You're watching FinTech Innovate AI, the channel that simplifies personal finance so you can make smarter money moves without the stress. 1. What is a credit score, really? A credit score is not just a random number sitting on your credit report, it's your financial trust score. It shows lenders how responsible you are when it comes to borrowing money and paying it back on time. Credit scores are calculated by credit bureaus, based on your credit history and financial behavior over time. This includes how often you pay your bills, how much debt you carry, and how long you've been using credit. Two of the most common scoring models are the FICO score and Vantage score. Both use a scale that typically ranges from 300 to 850, where higher scores reflect better credit habits. Think of your credit score as a financial report card. Just like a school grade shows your academic performance, this score tells lenders how trustworthy you are with money. Whether you're applying for a credit card, a car loan, or a mortgage, this number is one of the first things they'll check. So understanding how a credit score is calculated can give you a serious advantage when managing your finances. 2. Why credit scores actually matter, and when they hurt you. Your credit score isn't just a background number, it plays a major role in almost every big financial decision you make. Whether you're applying for a personal loan, getting approved for a credit card, or trying to rent an apartment, your score is part of the decision process. Lenders use your credit report to assess risk, and your credit score is the shortcut they trust the most. A higher score tells them you've handled money responsibly, which often means you'll get approved faster and with better terms. In fact, the better your score, the lower your interest rates, meaning you save serious money over time. A high credit score could save you thousands on a car loan or tens of thousands over the life of a mortgage, but when your score is low, you might still get approved, but you'll be offered higher interest rates, bigger down payments, or worse, get denied completely. That's why credit scores are so important. They don't just affect your ability to borrow, they directly impact how much your borrowing will cost you. 3. The 5 factors that decide your credit score. With real-life scenarios, your credit score is built on 5 major factors. Understanding each one helps you avoid mistakes and boost your score over time. First is payment history. It makes up 35% of your credit score. Missing even one payment can damage your score for years. Sarah once missed a $50 utility bill, and her score dropped by over 80 points. That one slip took months to fix. Second is credit utilization. This counts for 30% of your score. It's the percentage of credit you're using compared to your total limit. Try to keep your usage below 30%, but under 10% is even better. Third comes the length of credit history, worth 15%. The longer your accounts have been active, the better it reflects on you. That's why keeping old credit cards open can actually help your score. Fourth is credit mix. This affects 10% of your score. Having a variety of credit types, like a credit card and a loan, shows lenders you can handle different responsibilities. Last is new credit inquiries, also 10%. Each time you apply for credit, a hard inquiry is made. Too many applications in a short time can make lenders think you're a risky borrower. These 5 credit score factors work together to shape how trustworthy you look to lenders. Mastering them gives you control over your financial reputation, and that's how you build long-term credit strength. 4. How to check your credit score for free, safely. Before you improve your credit score, you need to know where it stands, and yes, you can check your credit score for free without hurting it. Use trusted platforms like annualcreditreport.com or Credit Karma. These sites are safe and give you access to your full credit report and score. By law, you're entitled to one free credit report every year from each of the 3 major bureaus, Experian, Equifax, and TransUnion. If you space them out, you can check one report every 4 months completely free. Many people think checking their own score lowers it, but that's a myth. When you check it yourself, it's called a soft inquiry, and it has no effect on your score. Make it a habit to check your credit report regularly. It helps you spot errors, track your progress, and stay one step ahead of credit issues. 5. Proven steps to improve your credit score easily. Now that you understand how credit scores work, let's talk about how to actually improve yours. These proven steps are simple, actionable, and they really work, no complicated tricks involved. Step 1. Pay your bills on time, every single month. Payment history has the biggest impact on your credit score, so never miss due dates. Use calendar alerts or auto pay to stay consistent. Step 2. Keep your credit utilization low. Try to use less than 30% of your available credit, and if possible, keep it under 10%. This shows lenders you're not overly dependent on credit. Step 3. Don't close your old credit accounts. Even if you're not using them, older accounts help lengthen your credit history. The longer your track record, the better your score looks. Step 4. Limit new credit applications. Each new application causes a hard inquiry and can lower your score slightly. Apply only when necessary to avoid looking like a risky borrower. Step 5. Request a credit limit increase, without increasing your spending. If your credit card issuer approves a higher limit, your utilization ratio improves automatically. This can give your score a nice boost without doing anything extra. Small, smart habits like these add up quickly. And if you stay consistent, your credit score will start to reflect it. 6. Myths that might be damaging your score right now. When it comes to credit scores, there's a lot of bad advice floating around, and believing it can quietly hurt your progress. One of the biggest credit score myths is the idea that you should close unused credit cards. But closing old accounts can actually lower your score by reducing your credit history and available credit. Another common myth is that checking your own score will damage it. The truth is, only hard inquiries, like applying for a loan, can slightly affect your score. When you check it yourself, it's called a soft inquiry and has no impact at all. And here's one that confuses a lot of people: you do not need to carry a balance to build credit. In fact, paying off your balance in full each month is better for your score and your wallet. Busting these myths not only protects your credit, it helps you build smarter financial habits with confidence. 7. Common mistakes that are quietly killing your score. Now let's talk about the small mistakes that often go unnoticed, but slowly destroy your credit score. Ignoring medical bills is one of them. Even a small unpaid medical bill can get sent to collections and damage your credit for years. Another risky move is co-signing a loan without fully understanding what you're responsible for. If the other person misses payments, your credit takes the hit. Some people also ignore small collection accounts, thinking they don't matter. But lenders see any unpaid debt as a red flag, even if it's just a few dollars. And lastly, not reviewing your credit reports regularly is a costly habit. Errors, identity theft, or unknown issues can sit on your report and drag your score down silently. Avoiding these bad credit score habits can protect your financial future and give you long-term peace of mind. 8. Bonus tip that works like a charm, but few people know it. Here's a powerful credit hack that almost no one uses, but it can boost your credit score fast. It's called becoming an authorized user on someone else's credit card. If you have a trusted family member or friend with a strong credit history, they can add you to their account as an authorized user. You don't need to use the card or spend anything. Just being linked to their account allows you to benefit from their positive payment history and credit age. This strategy works especially well for young adults who are just starting out or anyone trying to rebuild credit after financial setbacks. Lenders will see that long, clean history as part of your own report, and your score can rise in just a few months. But make sure the primary user is financially responsible, because their actions will also affect your report. It's one of the easiest ways to boost your credit score fast, and most people don't even know it exists. 9. Final takeaway, your credit score equals financial freedom tool. At the end of the day, your credit score isn't about being perfect, it's about being consistent and aware. You don't need to be an expert to improve it. You just need to make smart, simple decisions and stick to them. A few small habits today, like paying bills on time and checking your credit report, can open massive financial opportunities in the future. Better interest rates, faster approvals, more confidence with money, it all starts with a stronger credit score. Think of it like your financial reputation. When you treat it with care, it opens doors you didn't even know were possible. If this video helped you understand credit scores better, don't forget to like, subscribe and share. Thanks for watching.